A stock that's already up 150% in 2025 could potentially double again in 2026, according to bullish forecasts. While I can't promise you 1x returns, that would be irresponsible. I can show you why analysts are calling this AI company the backbone of the modern enterprise. Let's break down the data. What's up, investors? Today, we're diving deep into Palantir Technologies, a stock that has dominated headlines and portfolios throughout 2025, as we spent the last week analyzing their latest earnings, dissecting analyst reports, and examining market trends to give you an honest, data-driven perspective on whether this stock to buy now deserves a place in your portfolio. I'm not here to hype you up with unrealistic promises. I'm here to present the facts, the financials, and the risks. By the end of this video, you'll understand exactly why institutional money is both betting on and against this AI powerhouse. Let's get into it. Company introduction. Palantir Technologies, trading under ticker PLTR on Nasdaq, isn't your typical tech stock. Founded in the aftermath of 9/11, this data analytics specialist builds AI-powered software platforms Foundry, Gotham, Apollo, and their game-changing artificial intelligence platform called Ape. Think of them as the operating system that helps governments and Fortune 500 companies make sense of massive, complex data sets. As of January 2, 2026, Palantir is trading around $177–180 per share with a market capitalization of approximately $424 billion. That's right, they've joined the elite club of tech titans. And they got there fast. Why now? The perfect storm. Here's what's creating urgency around this stock to buy now. Palantir just completed a historic 2025, with its stock price surging over 150%. But the momentum isn't slowing down. Their Q3 2025 earnings report, released November 3rd, absolutely crushed expectations. The timing is critical. We're witnessing the decision intelligence era where AI isn't just answering questions, it's making autonomous decisions. Palantir has positioned itself as the infrastructure layer for this transformation. The U.S. government is using AI to streamline operations through initiatives like the Department of Government Efficiency, and Palantir is reportedly a primary vendor. Meanwhile, commercial adoption is exploding. Their Ape platform is turning into what CEO Alex Karp calls the operating system for the modern enterprise in the era of AI. Financial metrics. The numbers don't lie. Let me hit you with the actual data from their Q3 2025 earnings. Current stock price, $177.75 as of January 2nd. 2026 market cap, $423.66 billion. PE ratio, 422.92. Yes, you read that right. Forward PT, 192.1. For now, here's where it gets interesting. Q3 2025 revenue, $1.181 billion, a 63% year-over-year increase. Full year 2025 revenue guidance, $4.396, $4.40 billion, raised multiple times. Q3 GAAP net income, $475.6 million, up from $143.5 million a year ago. Adjusted operating margin, 51%, that's best in class for enterprise software. Adjusted EPS, 21 cents versus 17 cents expected. The standout metric, U.S. commercial revenue grew 121% year-over-year to $397 million. Total contract value for U.S. commercial deals more than quadrupled to $1.31 billion. Their Rule of 40 score combining revenue growth and operating margin hit 114% in Q3 2025. For context, most software companies celebrate breaking 40%. Palantir is at 114%. Cash position, $6.4 billion in cash and liquid securities with virtually zero debt. Free cash flow, $540 million in Q3. With full-year guidance of $1.90 to $0.1 billion, these aren't projections, these are verified results. From official earnings reports, growth catalysts, what's driving upside first? Government contracts remain rock solid. Palantir secured a $10 billion 10-year contract with the U.S. Army in 2025. They've also landed a £1.5 billion defense deal with the UK government. Revenue grew 52% year-over-year in Q3. Second, Commercial AI adoption is accelerating faster than anyone predicted. Companies are moving from pilot programs to full-scale deployments. Palantir's bootcamp approach, where they deploy a band show results in weeks, is converting skeptics into customers. Third, strategic partnerships are multiplying. Recent collaborations with NVIDIA, Snowflake, and Lumen are creating an ecosystem effect where Palantir becomes more valuable as more companies adopt it. Fourth, the regulatory environment is playing to their strengths. The EU AI Act, set to become fully applicable in August 2026, creates compliance requirements that Palantir's architecture naturally satisfies. Their data provenance tracking and granular permissions give them a presumption of conformity advantage. Finally, analysts are projecting 2026 revenue between $5 and $50.6 billion. If they hit the high end, that's another 36% growth on top of 2025's 53% growth. Price targets and upside potential. Here's where we need to be realistic. The consensus analyst price target is around $185–$187, which represents modest upside from current levels. However, price targets range wildly. Bullish target, $255. Evercore EC median target, $187. Bearish target, $50. That $255 target represents about 44% upside from current prices. Some long-term forecasts suggest $350 plus by late 2026, which would indeed approach a double from current levels. But let's talk about that 10x claim in the title. For a Palantir to 100 from $180, it would need to reach $1,800 per share. That's not happening in 2026. However, if we look at smaller cap AI stocks or consider a longer time frame, multi-bagger returns are possible. Palantir itself was a small cap just a few years ago. Risk factors, the other side of the coin. Now for the hard truth every investor needs to hear. Palantir's valuation is astronomical. A forward P/E of 192 means you're paying for nearly 200 years of forward earnings. The price-to-sales ratio of 117 is more than triple its closest software peers. History provides a sobering lesson. Before the dot-com crash, even giants like Cisco, Microsoft, and Amazon peaked at P/S ratios between 30 to 50. They all crashed hard when the bubble burst. Palantir is trading at a P/S of 117. The company faces legitimate competition risk. While they claim to compete mostly with homegrown solutions, companies like C3.ai, Snowflake, and even Microsoft are developing competing platforms. Government contract concentration is another concern. About 55% of revenue still comes from government clients, with the U.S. government accounting for 80% of that. A shift in administration or budget priorities could hurt growth. Institutional investors have been selling. Morgan recently reduced its position by over 32%. T. Rowe Price cut its stake by nearly 24%. Institutional ownership sits at just 56.44%. The smart money is cautious. Of the 16 analysts covering PLTR, only 3 rate it buy, while 11 rate it hold and to say sell. That consensus hold rating reflects skepticism about sustaining growth at this valuation. Finally, any hiccup in execution, a missed quarter, slowing commercial growth, or margin compression could trigger a sharp correction. The stock dropped 25% in August 2025 after touching all-time highs, proving how vulnerable it is to sentiment shifts. Comparison to competitors. When you stack Palantir against other enterprise software companies, the numbers are striking. ServiceNow, Snowflake, and Datadog all trade at far more reasonable multiples despite strong growth. Palantir's Rule of 40 score is the highest, but its valuation premium is even higher. The question isn't whether Palantir is a good company, it clearly is. The question is whether it's a good stock to buy now at these prices. If you're considering Palantir, think about position sizing carefully. This isn't a core holding, it's a high-risk, high-reward satellite position. Consider dollar cost averaging rather than making a lump sum investment. The volatility works both ways. You could also wait for a pullback to the 100-day moving average around $162, which has provided support during previous corrections. Watch for the Q4 2025 earnings release on February 18, 2026. That report will be critical for confirming whether the momentum can continue. Remember, all investments carry significant risk. Past performance absolutely does not guarantee future results. Palantir's historic returns don't mean they'll continue. This is educational content, not financial advice. I am not a financial advisor. And nothing in this video should be construed as a recommendation to buy or sell any security. Always consult with a licensed financial advisor before making investment decisions. Never invest money you can't afford to lose. Especially in highly volatile stocks trading at premium valuations. Do your own research and understand what you're buying. So, will Palantir 10x in 2026? Probably not. But could it deliver strong returns for risk-tolerant investors who believe in the AI transformation thesis? Possibly. The data shows a company executing at an elite level. But price for absolute perfection. If you found this analysis valuable and want more data-driven stock breakdowns like this, smash that like button. It helps YouTube show this content to more investors who need honest analysis instead of hype. Now I want to hear from you. Is Palantir on your watch list? Or are you waiting for a better entry point? Do you think the valuation is justified? Or is this AI bubble territory? Drop your thoughts in the comments. I read every single one. And if you want weekly stock analysis that cuts through the noise and focuses on facts, subscribe and hit that notification bell. This Stock to Buy Now analysis series covers the companies shaping our financial future. Until next time, stay informed, stay skeptical, and happy investing.